Namaskaram everyone, this is Nishanth Reghunath here and welcome to a new video from KYDU's Financial Management Bootcamp. So throughout the course of our classes, we reached a particular point wherein we were discussing investment decisions of a company, and under investment decisions we saw how a company decides or takes decisions regarding long-term investments under a study called capital budgeting. And we moved on to the investments that a company makes for short term under a study called working capital management. So under working capital management, let me quickly put the chart on screen so it will be much more easier. Yeah, here it is. So under working capital management, we saw the basic fundamentals for working capital management and the very important concept called the working capital cycle. And from there on, we moved on to individual elements of working capital management, and we finished cash and treasury management with the last video. In this video, we'll be starting off with the second element under elements of working capital management, and that is inventory management. I'm pretty sure you are all very well aware of the term inventory, right? In case you are not, let me quickly summarize. Inventory is nothing but stock of a company. Now it can be in the form of raw materials, it can be in the form of work in process, or it can be in the form of finished goods. Alright. Now it goes without saying, this particular item called inventory, which is made up by these three items, I'll call them as inventory or stock. They are a major part of your working capital, correct? What is working capital? The capital that is required for the day-to-day running of a company, and it comprises of your current assets, and your net working capital is current assets minus current liabilities. And when you check your balance sheet, when you check your current assets, one of the most important items there you would find are raw materials, working capitals, work in process, and finished goods, together termed as inventory. Now, since this is a major part of working capital, it goes without saying it will be very important for the company to manage it effectively. We saw another very important part of working capital, that is cash, and how it is to be managed from the previous videos. In this particular video, or the videos that might follow after this for the same topic, you will see how a company or how an entity can manage their very important working capital element called inventory or stock. Hence, this study is called inventory management. So inventory management is nothing but a study wherein various financial management principles tell us or teach us on how to manage our raw material, how to manage our work in progress, and how to manage our finished goods. And by managing, what does it mean? To manage an expense, manage a cost. What does it mean? To minimize, right? To reduce cost and to increase profit. So how can you manage your inventory in such a way that this management will end up in reducing the cost of inventory? At the same time, this reduction in inventory will have another effect on its profit, and that will be increasing it. Alright, so let's see what are the different ways a company can actually use to manage their inventory. So taking you back to my chart. So under inventory management, we have two areas of study. One is techniques of inventory management, and other is inventory control ratios actually. There are two ratios. Now the ratios that you see here are ratios that you have already come across in our study for ratio analysis that came under, I think it was the second module, tools for financial analysis, second or third module, which was tools for financial analysis, and the same thing here. We just have two ratios here. One is input-output ratio and stock turnover ratio. I'm not dealing with them right now because the more important part or more important area of our studies, techniques of inventory management, I'll go there. Once we are done with that, we'll move on to inventory control ratios. Okay. So under techniques of inventory management, we have two ways in which inventory is managed. Wait, sorry, I accidentally deleted one. Not two, three ways in which inventory is managed. Number one is EOQ, economic order quantity. So EOQ stands for economic order quantity. If you have learned costing from the first group, or if you have learned cost accounting before, there are high chances that you might have come across this term economic order quantity. Then we have another step. We'll be learning it in detail. There will be a couple of questions for the same topic as well. And once that is done, we'll be moving on to our next topic, that is inventory levels. Nothing but certain levels set by a company for their inventory. Like this should be the minimum level at which we should maintain stock. This should be the maximum level at which we should maintain stock. If our stock reaches this particular level, we should put a new order. Things of that sort. And finally, the last area, couple of analysis techniques. That is certain techniques which a company can use to analyze, classify, like dive deeper into understanding how their stock works, how their stock moves, which is the most important stock out of their raw materials, which is the most important stock out of their work in process, which are stocks for which you should pay extra care, which are stocks for which you do not have to pay care at all, which are actually stocks which is useless for the company but still we have bought it. So various techniques to analyze it, and they are ABC, perpetual, just-in-time, VED and FSN. So we'll be discussing all these analysis techniques in detail as well. Now once that is done, we'll be moving on to inventory control ratios. So since EOQ is the first item here, let's start off with EOQ itself. Okay, so EOQ stands for Economic Order Quantity. Okay, so this is what EOQ stands for. And EOQ tells us the best quantity to order our raw materials. So it tells us the best quantity to order our raw materials. Okay. Now let's see how EOQ tells us how the best quantity to order raw materials. Okay, how does EOQ work? See, when you are ordering, when you are purchasing raw material, what are the different costs that are involved? What all costs are involved when you purchase a raw material, when you have raw material in stock, when you have to carry raw material in stock? Number one, your purchase price, right? Your purchase price. So for example, let's take the case of our furniture factory. In a furniture factory, our raw material is wood. So imagine this is wood. This is logs of wood which we have bought. Okay, so in one lot we are buying say 5 logs. Let this be 5 logs that we are buying in one order. Say each log is a 10 kg log, and wood is sold at 10 kg. 1 kg, say it's sold at 100. So 10 kg into 100 will be 1000 per log. So in total we have 5 logs. So 1000 into 5. We have 5,000 rupee worth of raw material that we are ordering right now. Okay. So that's our purchase price. Fine. Number 2, another cost that can be associated with having inventory is, or with having to order inventory is, ordering cost. Say imagine this is a big company. And they have multiple orders coming in regularly. So this is a company which manufactures, say, at a scale of 10 crores a year or 100 crores a year. That's their total revenue. So that means their monthly revenue will be close to, if it's 100 crores a year, their monthly revenue will be close to 8 to 10 crores. Yeah. So 8 to 10 crores. Imagine how much of furniture they'll have to sell for reaching an 8 to 10 crore revenue. Yeah. So in order to sell so much of furniture, they will need to have so much of raw material in stock. Correct. So if they are having a humongous monumental quantity of raw material in stock, it is going to be very hard to manage the raw material department, right? Like you need to have a stores department, you need to have someone who's taking care of the stock levels, you need to have someone who's there to order the best material, like find out who are the different suppliers of wood, take the cost from different suppliers of wood, find the best price for the company, find the best quality wood for the company. So you need to have someone to take care of this ordering process, right? Someone who do all the calling your vendors, calling your suppliers, asking, so what kind of wood do you have? Do you have my requirement of rosewood? Do you have my requirement of mahogany? If you have mahogany, which grade mahogany you have? Which grade rosewood do you have? He'll have to do all those stuff, right? So you need to have a dedicated department to take care of this particular field, correct? And that department, let's term them as purchase department. So there will be like say n number of staff doing all the calls, managing all the emails, discussing with your stores department and asking which wood do you need next, so that we need to order it right now so that we get it in certain amount of period. Yeah. So you have a purchase department, an ordering department, and this ordering department will definitely incur cost to the company. And this cost is directly associated to the raw material. So we can say that we have another cost called ordering cost. Yeah. And finally, we have one more cost, and that cost is the cost which is incurred by the company once the ordered material reaches the company. The stores department. The stores department will have to take care of maintenance of the stock, storing of the stock, making sure the store stock is effectively taken care of. For example, if it's wood, things like wood react with nature. So if you do not store your wood properly, what happens is it will react to nature. It might absorb moisture or it might dry out. If it absorbs moisture or if it dries out, the composition of the material changes, and once the composition changes, it becomes very hard to work with. Yeah. So you have a stores department which will take care of your storing cost. Yeah. And the term that we are going to use here for storing cost is not storing cost, even though we can call it as storing. It's not going to be called storing. We'll be calling it as, carrying cost. Carrying cost. That is a cost for carrying the raw material in the company, carrying the raw material safely in the company, carrying the raw material in effective, usable condition for the company. So there are these three costs associated with the raw materials that you buy for your company. Okay. And what EOQ targets to achieve is find a quantity wherein you take consideration of all these costs and ensure that all the costs are at bare minimum, are minimized to the best extent possible, See, there is a very interesting relationship between carrying cost, ordering cost, and the quantity of the material that you order. I'll show you what that relation is. Let me quickly draw a graph. Sorry if the lines look crooked. I'm drawing freehand, hence it's not going to be so straight. Okay. So let my y-axis be cost. Let my x-axis be quantity. See, the thing with carrying cost is pretty simple. The more the quantity, the higher is going to be the cost. Because if I'm carrying 2 kilograms or 2 logs of wood, and if I'm carrying 10 logs of wood, it goes without saying, more the number of quantity that I'm ordering, more the quantity, the more will be my storage cost. So if I have 10 kgs to store, 10 wood logs to store, I'll need a bigger storeroom than if I'm having only 2 logs to store. So 2 logs I can store in a small storeroom, but for 10 logs I need a bigger storeroom. Correct. So carrying cost is something that goes directly proportional with the quantity that you order. Higher the quantity, higher the cost. But at the same time, ordering cost is actually different. Ordering cost is indirectly related. Say, ordering cost is indirectly related because, just imagine, I need, say, 10, 100 or 1000 logs. 1000 logs a year. 1000 logs a year. So 1000 logs a year is my requirement. I can order it as 500 logs per order. So like that I can place 2 orders, or I can order it as 200 logs at orders of 5 orders, or it can be 100 logs per order and I'll order 10 orders. So when I'm having 100 logs per order, so if my order style is ordering 100 logs in an order, I'll have to make 10 orders. So I'll have to make 10 calls, 10 emails, 10 quotation requests, 10 proposal analysis from our suppliers. But if I'm ordering 500 logs in an order, the whole effort that I'm doing for 10 times can be reduced to 2 times. Correct. So when the quantity increased, my effort decreased. Correct. But when my quantity decreased, my effort increased. So in 100 logs, I'll have to take effort 10 times so that I can reach 1000 logs. But if I'm ordering 500 logs in one call, so I'm calling, send me 500 kilos, 500 logs of wood. So my supplier says, sir, which one, mahogany, rosewood, or cedar, or spruce, which one do you want? Teak, which one do you want? So I tell, I need teak. So yes, sir, which quality of teak? We have AAA grade, we have AA grade, which AAA grade. Sir, this is our price for AAA grade. So I'll ask his price and I'll call some other supplier. Say I'll call 3-4 suppliers, get the price and order. That's it. 500 kg done. And like that, I'll have to do twice. So say 3 suppliers called twice, so 6 calls made. But if I'm ordering only 100 logs, so I'm calling today, I get 100 logs. But I'm calling 3 suppliers, so I made 3 calls. Now I had to make one more call. The next time my 100 logs run out. I'm calling 3 suppliers again. Then I'm calling 3 suppliers again. Then I'm calling 3 suppliers again. And like that, I'm calling those 3 suppliers 10 times. So in total, I'm making 30 calls. 30 times of paperwork. So sorry, 30 number of paperwork, 30 number of emails. Correct? So lesser the ordering quantity, higher the ordering cost. Sorry, correct. Lesser the ordering quantity, higher the ordering cost. But higher the ordering quantity, lower the ordering cost. Correct? So ordering cost reduces. Ordering cost reduces with the quantity. Now, EOQ is a very, very interesting area. EOQ is a very, very interesting area wherein you manage to keep your ordering cost very low, as low as possible, without letting your carrying cost being very high. That is, you bring down your ordering cost to a very certain level and make sure your carrying cost does not cross this level. Your carrying cost is also at this basic level. So I'll show you with the help of, See, my ordering cost is going down all the way here, right? Right. So if I am to take this point of my ordering cost, it means that my ordering cost is here and my carrying cost is here. So there is a gap. Okay, let me just take a different color. Sorry, different pen to write. So there is this gap here, correct? And yeah, there is this gap here. Wait, I think it's better to use black color itself. There is a gap here, correct? Because this is where I clicked my ordering cost and my carrying cost was here. So there is a gap here. That means I can still bring down ordering cost. I can bring down till here. I can bring down till here. And finally, when I bring down till here, my carrying cost is also here. That means my ordering cost is brought to the maximum minimum possible and my carrying cost has not crossed that level. But if I bring my ordering cost here, what would be my carrying cost? So at this quantity, my ordering cost is here and my carrying cost is here. Correct? See if I'm drawing a line. Yeah. So that means my carrying cost went high, very high. But at this point, my ordering cost is here, so is my carrying cost. So I can say that at this point, I've brought my ordering cost to the least minimum possible till here, and my carrying cost is only risen till here. But if I take it beyond this quantity, if I go to any quantity to the right side of this particular point, my ordering cost will come down, but my carrying cost will go up. So this particular point wherein my carrying cost and ordering cost is same or is found to be minimal, the least, is called your EOQ. So at EOQ, your carrying cost is minimum and your ordering cost is minimum. So this EOQ will tell us at which quantity. So in the x-axis, it's quantity like 10, 100, 200, 300, 400, 500, we have multiple quantity. So EOQ will tell us at which quantity, say here it was 450, at which quantity you should order so that your ordering cost and carrying cost is controlled to the best extent possible. So this is what EOQ tells us. Okay. Now how to find EOQ? You do not have to draw a chart every time. What you can do is you have a formula. EOQ is root of 2AO by C. 2AO by C, wherein A is the annual demand. Here it is 1000 logs. O is ordering cost, very, very important, per order, ordering cost per order. Pay extra care here. It's not simple ordering cost, it's ordering cost per order, because in the question they'll give ordering cost for a whole year, they might give ordering cost for half a year, they might give ordering cost for 5 orders. What you need to find out is ordering cost for one order. And C is carrying cost per unit per annum. Very, 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 very important, this particular tagline, not tagline, the tail, per unit per annum. So you do not want carrying cost of total 1000 kgs. You do not want carrying cost if I'm ordering for 500 kgs, sorry, 500 logs. I do not want carrying cost for 500 logs. I want carrying cost of 1 log per unit, 1 log for one whole year. For one whole year. Clear? So that is EOQ, 2A, root of 2AO by C. I will explain this further by taking a very simple example. Let me quickly get that question. So here is a basic question from EOQ. Let's quickly read and analyze the question, get the information that's required, and proceed with our answer. So it says calculate EOQ for the following information. Also find the number of orders to be placed. So they asked us to find out what is the EOQ. They want us to find out what is the EOQ. Also, once you get the EOQ, find out how many orders you need to place at that EOQ to get our required demand. Okay, requirement for the company. So number 1, consumption per annum, 10,000 kg. So annually per annum, right? Annually the company requires 10,000 kg of raw material. So this is A. Ordering cost per order, 50. So your ordering cost, that is O, is 50. Cost per raw material is 2. Raw material cost is 2. Storage cost is 8% per annum, and this 8% per annum is, if not mentioned in the question, this 8% per annum is on the inventory, that is on 2. So storage cost, that is your carrying cost, is 8% of 2. So your C comes from these two items. So you have your A, O and C. So EOQ is nothing but root of 2AO divided by C. Correct. And here it is 2 into A, that is 10,000. Your ordering cost per order, see, per order is 50 divided by carrying cost per unit per annum. So carrying cost per unit, here what is the unit? Kg. Kg is the unit, right? So we are given 1 kg cost. 1 kg cost is given 2, and the carrying cost is 8%. So it should be 8% of 2. Now people might make a mistake and take, instead of 2, they will multiply 2 with 10,000, because that's the total cost of raw material we have. See, 1 kg of raw material is at 2. Total we have 10,000 kg. So for 10,000 kg it will be 20,000. So students make the mistake of taking 20,000 here. So you need to carry 20,000 worth of raw material, right? But no, for the formula you only take per unit per annum, and here unit is kg. So for 1 kg. Now this will be, let me just expand, 2 into 10,000 into 50 divided by, so we can take out some stuff here. So you can take 2 and it will be 50 here, correct? It will be 4 here and 25 here, 25. Now I can take this 2 and it will be 2 on the bottom, and if I'm taking this 2, it will be 25 here. So this 25 here will go to the numerator. So I'm just going to change what I've written here. Go, delete. It will be 10,000 into 25 into 25. Root of 10,000 into 25 into 25. If this seemed confusing, all you can do is just basic calculator work. Just take out that calculator and do it. So it will be root of 25 into 25 into 10,000. So 25 into 25 into 10,000, root would be 2,500. You can take the calculator and find out for yourself. So we found our EOQ and it is 2,500. And 2,500 what? 2,500 kg of our raw material. So for us, the best way to place order our raw material is 2500 kgs in one order. So like that, how many orders should be placed? Number of orders. They have also asked us to find out number of order, right? How many orders should we place? So we need a total of 10,000. We need a total of 10,000. That's our annual demand. And in one order, we are placing 2,500. So we need a total of 10,000 kgs required. And in one order, we are placing only 2,500 orders. Sorry, in one order, we are only getting 2,500 kg. So like that, we need 4 orders. So 10,000 divided by 2,500, 4 orders. So 2,500 in one, second on 2,500, so total 5,000. Again 2,500, so 7,500. Again 2,500, so 2,500, 5,000, 7,500 and 10,000 kgs. Alright, so with that we completed a very basic question of EOQ. We'll be doing more questions. You'll find multiple videos on different kinds of questions on EOQ. EOQ with discounts is a very interesting area. You will find the videos for the same wherein I will do case studies wherein we take EOQ, but not just EOQ, but EOQ with an additional clause of discounts. That's a very interesting area. Do check those videos as well. And once you do the questions from those case studies, your conceptual understanding, your clarity with the topic of EOQ will be perfect. Alright. Now we are done with the EOQ. We are going to the next stage. And that next stage, if I remember correctly, it is levels of inventory. Inventory levels. So shall we start? Yeah. So let me quickly go back to my note. Inventory levels is what we are going to learn next. Inventory levels. See, this is my go down. Okay, this is my go down. And I have stored wood like this. Each log of wood. Okay. Okay. This is my inventory storing go down. And on top of these logs also have multiple logs. Logs lying on top as well. On each log I have different logs lying on top. Now what inventory levels tell us is, at what level should you maintain your stock? Maintain your stock. That is, at any given day, what should be the minimum, not just minimum, what should be the ideal level? What should be the ideal level of stock to be kept in company? Now, how do you find that out? To find out that ideal level, you have multiple levels to compute. Multiple levels to compute. So it's not like you do a calculation and find the ideal level. Instead, you find out multiple levels. Levels like minimum level. That is, at any given day, minimum to minimum, you should have so much of stock in your company. Minimum to minimum. Another level is, at any given day, your stock shouldn't ideally go beyond this level. Like, this is the maximum level of stock you should keep. You should not have more than this much of stock in your company. Alright. Then another level is reorder level. I'm just using RO for short. Reorder level. That is, if your stock reaches this particular point, put a new order. Place a new order for material. And then finally, another level called the danger level. That is, if stock goes below this point, it is going to drastically affect your production. It is going to drastically affect your operations. So it's very dangerous if your stock reaches this particular point. See, it's like saying you have fuel meter, right? You have fuel meter in a motorcycle. Say, for old scooters and all, it used to be something like this. There was E here, there was F here, and like 1, 2, and the central portion 3, 4. Okay? Things of this sort. And in this area, there would be a reserve area. Yeah. So F is your maximum. This is your maximum level. This is the level at which you can maximum store petrol or diesel in your scooter. Okay. Minimum level, it depends on each person. Say at what level you should always minimum have your petrol at. So if I personally maintain my minimum fuel in my motorcycle or my scooter or my car somewhere around like here in this area, above half tank but not full tank. This area is my minimum level. But at times it might go below this minimum level, and that's when I tell myself I need to fuel extra, put in more fuel. So this can be my reorder level. This can be my reorder level. So the level at which I fill my petrol. Okay. Or it can be my minimum level itself. But it differs from person to person. And there will be a level wherein if I go to that level, it's going to be very bad for my motorcycle. I'm not sure whether you have come across the fact that maintaining low fuel in your motorcycle or your car is very dangerous in modern machines, because modern machines work in a particular system called fuel injection. And if you put your fuel to a very low level, that your car or your motorcycle will run, but that's bad for your company. So for example, let's take that level to be the reserve level and the bar right above. So this is the danger level. So if I run my motorcycle continuously at this level, it's going to be very dangerous for the company. Or if I run my motorcycle in this level, occasionally, at times, always my motorcycle goes to this level, it's going to be dangerous for my motorcycle. Okay. So your levels in inventory management is similar to this fuel gauge. Okay. So what we are going to do here is we'll be finding our max level, minimum level, reorder level, and danger level with some interesting information. So the information that we will be using to find out these levels, common information that we need are: one, what is your rate of consumption? What is your rate of consumption? Like for example, in the case of a motorcycle, what is your fuel mileage? What is your fuel efficiency? Like what is your minimum mileage? What is your maximum fuel efficiency that you have achieved? What is the minimum fuel efficiency you have achieved? So you'll have your minimum fuel efficiency, you'll have your maximum fuel efficiency. I'm not sure whether you've heard, there will be people saying, there are owners of motorcycles and motor vehicles saying that when I ride in the city, I get like 15 km per liter for my car. But when I ride on highways, when I go for long tours and all, I get like 20 to 25 kilometers. Yeah, maximum I get so much of fuel mileage. So we find out what is your minimum and maximum consumption. Then what we need is our reorder period. Now this is not applicable for our particular product. As in the example, we do not have any kind of reorder period for fuel, because we go place order, we get fuel then itself. But a lot of products, if I order now, I only get it after a certain period of time. So for that also we'll have minimum and maximum. So sometimes if I place an order today, I'll get it like 2 days. But at times if I place an order today, I'll only get the product after 2 weeks. So minimum will take 2 days, max will take 14 days, 2 weeks, correct? Then we'll have another item called reorder quantity. As in at which quantity, at what quantity will you be reordering? So if whenever I fill my petrol for my motorcycle, I'll fill it like 5 liters or 4 liters or 3 liters. So what is the quantity at which I reorder? So with this information, and reorder quantity will not have any kind of minimum or maximum. Okay. So with this particular information, we will be finding out our danger, reorder, minimum and maximum level. So the order of computing will be, first we'll be doing danger level. Then we'll be moving to reorder level. Then we'll be moving to minimum level. And then we'll be moving on to max level. Alright, then we'll move to max level. So let's first check the formula for danger level. Okay. So danger level is normal rate of consumption, your normal fuel mileage. So I said my normal fuel, my minimum fuel mileage is 15, my maximum fuel mileage is 25. So my average fuel mileage is 20. Okay. So your normal rate of consumption into maximum reorder period. So if I order, I will take minimum of 2 days and maximum of 14 days. So here it will be 20 into 14 into maximum reorder period. Alright. Now next, reorder level. Reorder level is maximum rate of consumption into maximum reorder period. So here 25 into 14. Now minimum level is reorder level minus normal rate of consumption, that is 20 into reorder level minus 20 into normal reorder period. So what is the average of 2 and 14? Minimum 2, maximum 14. So your average is 2 plus 14 by 2, that is 16 by 2, 8. So reorder level minus 20 into 8. And my maximum level is reorder level plus reorder quantity. So what we have found here, and at what rate at which I always make my order. Reorder level plus reorder quantity minus my minimum consumption, rate of consumption into minimum reorder period. Okay. So these formulas might seem a bit confusing. Also, reorder level has couple more formulas as well that you can use, that I'll explain right after I establish a relationship with all the formulas that you're seeing on screen right now. So let's establish a relationship, and for establishing, I'm just going to color code stuff. Okay, so minimum I'm going to color code in yellow, normal I'm color coding in pink, and maximum I'm color coding in blue. Now, if you check, I'm starting with reorder. I'm leaving danger for now. I'm starting with reorder. If you check reorder, it's both maximum, both blue. So 25 into 14. Okay. If you check minimum level, you take this reorder level. Okay, let me just highlight reorder in green. You take this reorder level that you have already found out, and from there deduct both pinks. Product of both the pinks. Okay, fine. Now, I just want one more color. Let that be this one. Now, for maximum level, you take this reorder quantity along with our green reorder level, add them, and from that deduct both yellows, product of both yellows. Okay. See, in reorder level, the consumption and period was both max. In minimum level, the consumption and period was both pink. That is a normal one. In maximum level, the consumption and period was both minimum. That's a yellow level, yellow color. Okay. In danger, you have rate of consumption in pink and maximum reorder period in blue. So normal rate of consumption and maximum reorder period. So you see a relation here. So if you take these three, sorry, no, mistake. These three, you can easily establish a relationship. For reorder, both are max. For reorder, so for minimum, both are normal. For maximum, both are minimum. Okay. And in addition, you have these items as well. That's all. Okay. So let's quickly check a question and try finding out the answer. Okay. So the components of A and B are as follows. The information for there are two materials A and B, and they've given us different data. Normal usage is same as reorder consumption. Sorry, rate of consumption. Normal rate of consumption. This was supposed to be pink. Our pink data is 300. Our maximum consumption, this blue data, is 450. Our minimum consumption is 150. We have our reorder quantity as well. That is a cream color one. Then we have a reorder period. There also we have minimum and maximum. So minimum in yellow, maximum supposed to be in blue. Okay. We do not have the average, but we can find the average. We can find the normal rate of reorder period. So 4 to 6 weeks is the reorder period. Then our pink would be, our average would be, normal would be 5 weeks. Correct. If 2, because 4 plus 6 will be divided by 2. If 2 to 4 weeks is our minimum and maximum, then our normal would be 2 plus 4 divided by 2. That is 3 weeks. Correct. So 3 weeks and 5 weeks. So if we found out all the pinks, all the blues and all the yellows. Now let's find out the answer of our question. So first let's do reorder level. So reorder level is both pink or both blue or both yellow. It was both blue. Correct. So I'm just going to find for A. Okay. I'm not going to do for B. For B, you can do on your own. So for A, your maximum rate of consumption is 450 into your maximum reorder period is 6. Correct. So check reorder level. Maximum rate of consumption into maximum reorder period. So it's 450 into 6. And that equals to 450 into 3 into 2700 units. Okay. Now I'm going to find my minimum level. That will be this 2700 units minus normal consumption into normal reorder period. So my normal consumption is 300. 300 into normal reorder period is 5. Correct. So 2700 minus 1500, that is 1200. Correct. Now moving on to my, let me scroll, my maximum level, that will be this 2700 of reorder level, 2700 plus my reorder quantity, that's the one in flesh tint color, this cream color, plus 2400 minus both minimum 150. My minimum consumption is 150 into minimum reorder period is 4. Correct? So 2700 plus 2400 will give you 5100 minus 150 into 4 will give you 600. Correct? So 5100 minus 600, 4500. So your answers are 2700, 1200 and 4500 as far as reorder level, minimum level and maximum levels are concerned. To find out my danger level, which we haven't found out, danger level is your minimum consumption. Sorry, no, not minimum, normal consumption, my bad, normal consumption into maximum reorder period. So you take your normal consumption, that is pink 300, into your maximum reorder period, that's 6. 300 into 6 and that will be 1800. Okay? But in general questions, you actually don't have danger levels, because in the formula for danger levels, there is something that I left to mention. Danger level is normal rate of consumption to maximum reorder period, but then this maximum reorder period is for emergency situations only, emergency purchases. They'll mention the question, they'll easily mention the question reorder period emergency. You take that maximum reorder period. In this question, since we don't have emergency purchase data, we take the normal maximum rate of reorder period. Okay. Now, besides this, there will be one more thing that the question might ask you to compute. That is your average stock. Average stock can either be your minimum plus maximum divided by 2. Your average of minimum level and maximum level. That is 1200 plus 4500 divided by 2. So 4500 plus 1000 only you 5700 divided by 2, and that is 2850 units. Or it can be another formula for average stock is minimum level plus half of reorder quantity. So minimum level plus half of reorder quantity. Your minimum level is 1200 and your reorder quantity was a reorder quantity for A 2400 plus half of 2400 is again 1200, 2400 units. So when you have in the examination or in any question a requirement to find out average stock, do in both methods. So you do this and put an OR and write this. Fine. So this is how you find out EOQ. Alright, sorry, not EOQ, levels of inventory. Alright. So this video has become pretty long. I didn't expect it to be this long. I wanted it to stay below 30 minutes. It has gotten to 42 minutes. And I'll do one thing. I'll stop this video for now. And the rest of the stuff that we need to deal with, and they are, quickly go to our chart. They are the inventory analysis techniques, ABC, perpetual, just-in-time, VED and FSN, which are majorly theory oriented. We'll deal with in the next video. That's the next part of our study for inventory management. Okay. So with that said, I'm winding up this video. I hope you got a really good understanding of the study. Got to know what inventory management is, what is the importance of inventory management, and understood very well the two very important concepts of inventory management, that is EOQ and levels in inventory. Yes, in case you have any doubt, please feel free to reach out. I'll leave my number and my contact details in the description, or you can use a chat window, or you can message directly as a comment. And if you liked my video, if you are liking our lectures, please give us a good review. Please share our content with our friends, others who are studying with you, along with you, your classmates, or people who you would think would benefit from our videos. And yeah, that's pretty much it. That's all that I wanted to share. So alright then, this is Nishanth signing off from yet another video of KYDU's Financial Management Bootcamp. I'll see you in the next one. Till then, take care and goodbye.